Hello, I'm Al Harnish, Fund Director of Commodity Growth Fund. The following tape contains two television presentations of KWHY Channel 22 in Los Angeles, broadcast live in the Los Angeles area on October 7th, 1986. The focus of both the 10-minute executive report interview and the 30-minute You're on the Line call-in show is the mutual fund approach to investing in futures markets. The response to these presentations in the greater Los Angeles area has been excellent, and you may want to consider the same marketing approach in your own area. In any event, this tape should be valuable to you in providing some insight into the type of questions you may receive from prospective investors and should demonstrate the vast market potential available to you. If I can be of any assistance to you in your marketing efforts, please contact me directly at Dunn and Hargitt. Thank you.
Guest is someone who you should listen to today. He is Al Harnish, the Fund Director and Vice President of Dunn and Hargitt's Commodity Growth Fund, a diversified commodities fund. Very nice to have you with us, sir.
Nice to be here.
Your brochure says if you like mutual funds, you'll love futures funds. Why is that?
Well, it's the same concept that's used where the investor can put a small amount of money in a fund, such as in the stock mutual funds, and participate in a widely diversified, broad group of portfolio of futures contracts.
Now, you feel this is much safer than investing in one individual commodity?
Yes, just the old theory of diversification. As we hear so many times, you got to be in the right markets at the right time. We try to be poised in all of the markets. We trade just about all of the commodity futures contracts so that we can pick up the trends when they do develop.
Are commodities funds a new idea?
Relatively new. Back in 1978, there were only some dozen publicly registered commodity funds. Now there are over 120 funds, and even now there are only a handful, about a dozen, that are open-ended, available for investment versus the closed-in partnership-type product.
And your fund is open-ended?
Our fund, Commodity Growth Fund, is open-ended. You can invest at the end of any calendar month at the net asset value.
You might explain the difference between the two funds. The other would be the limited partnership fund, where they would raise a certain amount of money within a month or two.
Right, normally about a 90-day offering period, and they would raise whatever money they could. They'd close out the fund at that time, trade it until they decided to close it down. It may trade for 20 years, but no new investors are taken in.
And the large percentage of commodity funds are run in that fashion?
Yes, they are. I think because it is a relatively new industry, and we're just starting to see a host of new open-ended type funds available so that investors can add to their investment even on a monthly investment plan if they desire.
So with the open-ended fund, I can get in at any time that I want to?
Yes.
And the minimum investment in your fund would be?
It's $2,000 in most states, yes.
What about increments above that?
In increments above that, you could add to your investment with as little as $100, anything $100 or more at the end of any month.
And
keep adding to it.
What about taking money out?
You can withdraw at the end of any calendar quarter, either all or partially.
Let's talk about the track record of your fund. Your fund is called the Commodity Growth Fund. How long has that been in existence?
Started trading in July 1984, and it's had 22% return on investment annualized 2 years, a little over 2 years.
Now, this fund invests in all commodities?
Yes, we trade a broadly diversified group of portfolio of commodities. In addition to the traditional commodities that we think of, such as the grains and meats, we also trade interest rate futures, precious metals, the energy futures, the foods, coffee, sugar, cocoa.
Do stock futures factor into that too?
And we happen to trade the S&P 500 futures index as well.
And most of your trading is technical, I would assume.
Yes, it's a technical trend following system.
Mm-hmm. What accounted for the 22% gain? Which commodities factored into that? Well,
different commodities in each year. In fact, almost different commodities in each month. Recently, of course, we've all been reading about the great rally in platinum because of the South African situation. So that's contributed profits in the past couple of months. Coffee earlier this year with the rise because of the drought in Brazil. Interest rate futures and foreign currencies were one of the big contributors last year. So that's the idea of a broadly diversified portfolio, that in a trend-following system, all you really want is movement. Now, if we are broadly diversified enough, usually something is moving, and we can take the profits in those areas. There'll be probably a different commodity each month that contributes to major profit.
From looking at the charts currently in the various commodities, what are you anticipating as far as areas that may be showing movement either up or down?
Well, again, trend following system. We don't ignore the fundamentals, but we basically go on our research and development that we've been doing for over 20 years now. And we have long positions in the portfolio right now, for example, in the precious metals, in the foreign currencies, and something just recent development in the grains right now.
And what about short positions?
Short positions, right now we are short coffee, for example, after the really tremendous rise that's had, and that's backing off a little bit recently. That's about the only short position at the present time.
To what do you attribute the popularity of the commodity funds?
Well, it is exciting, number one. 10, 15 years ago when we talked commodity futures, we were talking just the grains and the meats.
And pork bellies, yeah.
And pork bellies, the famous pork bellies. But now we're talking about anything, the S&P 500 index, the interest rate futures. So it's got a much wider audience. And I really do think a lot of people have been burned by going into the markets themselves. As you know, the risk is almost unlimited trading your own account. And this is and you need a lot of capital. I think asset management is really one of the keys to trading in the commodity markets. With a fund, you do have a limited liability, and I say limited liability, and all you can lose in a fund is 100% of what you put into the fund. Now, that sounds very negative, but if you trade your own account, you know, of course, with the margin calls, that you have your entire net worth at risk. Now, a fund avoids that unlimited risk.
How do you avoid that in a fund?
Well, mainly because the general partner in this limited partnership structure assumes all the risk for margin calls beyond the assets of the fund. So, yes, I'm not saying there's no risk. You can lose your entire investment, but you can never lose more than you invest in the fund. If there is a margin call, if the general partner just has a very bad year and loses the entire assets of the fund and more, which is possible, then the general partner himself must meet those margin calls. No investor will be called on for more money.
You are located in Lafayette, Indiana.
Right, home of Purdue, and we do a lot of research with them.
Okay, so the Commodity Growth Fund is actually headquartered in Indiana with Dunn and Hargitt.
Yes.
Okay. And you'll be here this afternoon at 2 o'clock with us on You're on the Line. So if anyone would like to ask you further questions about the fund, they can talk to you at 2 o'clock this afternoon directly.
Be glad to answer any questions.
Okay. We'll have your phone number on the screen in just a minute. I would like to ask what you have to send to the viewers if they call you.
Well, we can send them, of course, a prospectus and some general literature about commodities and commodity funds, and about our fund with performance and other information. You can call or write, and we'll be glad to send that information out to you.
Okay, let me give the phone number. It's in the 317 area code. The number is 423-2624. That number again in the 317 area code is 423-2624. 2624. And once again, we remind you to watch this afternoon at 2 o'clock on the You're on the Line show with Dick Spengler. At that time, my guest will be here, and he will be able to answer any questions that you might have concerning the Commodity Growth Fund with Dunn and Hargitt. My guest has been Al Harnish. He is the fund director and vice president of Dunn and Hargitt. Thank you for watching Executive Report.
If you desire additional information on today's program or would like to appear on Executive Report, please call us at 213-466-5441.
Stay tuned next for You're on the Line, and we're talking about commodity funds and futures funds. Very interesting ways to make money with commodities and futures. Stay tuned.
You're on the Line with Channel 22, the program that lets you, the viewer, ask questions of our special guests from the world of industry and finance. And now, your host, Dick Spengler.
Welcome to our program once again. Your program, really, because it means your need to know whatever our subject matter of the day might be. And today, the funds in commodities and futures. Our guest visiting us from a nice community in Indiana, from Lafayette, Indiana, as a matter of fact, Al Harnish. Back with us again. He was on the executive program earlier today. Al is the Vice President of Investment Services and the Fund Director with Dunn and Hargitt Investment Management in Indiana. And we know Dunn and Hargitt as one of the oldest firms in the commodity futures advisory industry, Al. And you formed, what was it, the first computerized commodity data bank. Also, I know you introduced the first publicly registered open-end commodity fund, so really one of the pioneering companies in our nation.
They've been in the futures industry for about 20-plus years and have a good reputation and leading-edge type research and technology.
And your background, sir, you've been in this business for quite a while yourself.
I've been in the futures business about 10 years now, after a military career.
So as the fund director, what are some of the bright spots here? Let's talk about some of the funds you have involving commodities and futures.
Okay, the Commodity Growth Fund is our open-ended fund that's trading 26 months now, and it's got an annualized return of about 22% over that period. I think the growth of public commodity funds that we've seen in the past 3 or 4 years is largely a result of many people accepting this product now as more as an investment product than the old wild speculation that people used to regard commodities. Professor Lindner of Harvard University about 3 years ago came out with a study that was rather revolutionary in that he said, not only can you increase your return by adding some small percentage of your total capital, 10 or 15% to a futures fund, but you can reduce your risk. Now this really set the investment community back a little bit because commodities were always considered a very, very high risk. And it really is very fundamental. In his study, he showed that the futures funds had the performance of futures funds had a very high negative correlation with the performance of the stock market. And I think that basically boils down to that the stock market does well when perceptions are that things are going fairly well, or at least people think they can forecast what the market might be doing. When crises come along, the market does poorly, and yet commodity prices change drastically.
If you want to talk about funds concerning commodities or futures, why, just give us a call right now. Al is the expert here. He is the fund director with Dunn and Hargitt Investment Management in Indiana, and he knows this business, and it is indeed a very interesting business. Now, as the fund director, how do you know which ones, which commodities, which futures go into that particular fund? Al, explain that.
We have what we call a broadly diversified portfolio of futures contracts. We trade all the groups that are available in futures, and just about everything is available now. Essentially, we break them down to the old traditional groups of the grains and the meats, but now we have the interest rate futures, the stock index futures, the precious metals, the foreign currency, the foods such as coffee, cocoa, sugar. So we trade them all, and really it's based on our research what positions we are going to have at any time. We're looking for the correlations between these commodities, and we want to see price movements. That's the main thing. Now, we have had a good return over the past years without any really drastically revolutionary moves. So we think we can do better even in the future.
Now, to invest in a fund these days, we just select the one we seem to like or get the advice from someone in your company, such as yourself.
Yeah, you can call us or write to us. We'll send you the prospectus and the literature with it, but there are some industry magazines that give you performance of the various funds. Check out the advisor. See how long he's been in the business. See how much money he has under management, because sometimes a very small amount of money under management, it can be different when you handle large sums.
Exactly. Our phones are starting to light up when we talk about commodities and also futures, Al. Our viewers want to know about these things. And from the fund standpoint we're talking about today, let's see what our viewers want to talk about. All right, you're on the line. Go ahead.
Yes, I'm interested in what your guest has to say about the precious metals, silver, gold, platinum.
All right. In platinum with the precious metals, how do you forecast that right now, Al?
Okay, we try not to forecast fundamentally, but of course we can't ignore fundamentals. As I said, our portfolio is essentially a technical trend following system. Right now we are long the precious metals, and of course much of this is due to the South African situation and some people talking about the fears of inflation coming back. However, we're really not gearing our positions in the fund to any of these fundamentals. We're looking for price movements. When we see the prices move, as they have in the precious metals, we get in on that trend. We have protective stops put on those positions, and we also have target areas where we will take our profits on that.
Do you just follow the trend, or do you just go with the trade? Or do you have a target that you get out at, or you just let the trend go?
No, we go with the trend, but also we have targets established from our research.
How about, what are your targets then in the precious metals, gold, silver, platinum?
Okay, right now they're about $30 off higher than the December contract. That changes daily, though. This is a dynamic trend following system where we measure the daily volatility, and we will adjust both the target and the protective stop on a daily basis depending upon changes in the volatility of those commodities.
Thank you.
Thank you, sir, and good luck to your trade, and hope you make some money there. All right, next, you're on the line. Go ahead.
Yeah, I just wanted to ask, does the firm itself or the fund itself, does it take different positions on a daily basis, or does it hold long-term positions in the market?
Relatively short-term. Almost all trading in the commodities, I think, is relatively short-term. Our average trade lasts approximately 7 days. Now, that's not to say that sometimes we will have trades that last more than 30 days, but it is a short-term trending. We could take a position today, and it's possible we can be stopped out on the same day, because we do carry quite close protective stops. In other words, our philosophy being to take those losses where you're wrong very quickly, so they're small losses, and have very large profits when it's trending with you.
One other question that I had.
I was wondering, as far as the stock indexes, are you guys playing more than just, let's say, the S&P 500? Are you playing the OEX and some of the others as well?
Right now, in our Commodity Growth Fund portfolio, we are only trading the S&P 500.
Thank you very much.
You're welcome.
We thank you for calling, sir. And back to our lines. On line number 3, it's your turn. Go ahead.
Yes, hi. I wanted to ask you, I heard it is also possible now to buy options for coffee. Just in the last time, I wanted to ask you what's the price differences to buy option or, future for the March contract?
All right. Mainly, we do not trade options in